Nothing can stop me. I'm all the way up. All the way up. I'm all the way up. I'm all the way up. Nothing can stop me. I'm all.
What is going on, superstars? It's 𝗵𝗵𝗶𝗵 here again. Welcome back to my channel. In my previous video, I shared a 15-second highlight on how I trade volatility 705 index with my smartphone. And after posting that video, I got a lot of responses and requests to do a full video on that subject. So in this video, you're going to learn how to set up your charts like mine, and I'm going to show you the strategy I use for getting sniper entries that gives me 200 to 1000 pips in less than 15 minutes while trading volatility 705 index with my smartphone. If you use this strategy consistently, you will be able to grow your account from as little as $50 to over $1000 really fast. To get the best from this video, I recommend you watch it till the very end and pay a close attention to every detail. In case you miss any part, you can always rewind and watch again. Before we get started, if you'd like to see more of my videos on volatility indices, please like this video, subscribe, and hit the bell icon. And also feel free to drop in the comments what you'd like me to talk about in my next videos. With all that said, let's get started. With over 20 years of experience, Deriv is one of the world's simplest, flexible, and most reliable broker for trading forex, commodities, stock, and synthetic indices. They give you 24/7 trading, sharp prices, tight spread, and over 100 tradable assets. I trade with Deriv, and it has been a very exciting experience. The user-friendly platform makes it easy for beginners and advanced traders to carry out all operations. Click the link on the description of this video to create an account and start trading your favorite assets. Before I place my entries on volatility 705, I mark out the psychological levels on the charts. That is the levels of support and resistance, as well as the zones of supply and demand. And to achieve this, I get to look at the market on the larger time frame. You can call that the macro time frame. That is the 4-hour time frame, the daily time frame, and also the weekly time frame. So let's just see how we can spot out every of these psychological levels. Now, when I talk about psychological levels, I'm talking about levels where buyers and sellers are looking to take their position. So if you want to maximize your ability to trade, you got to think about what other traders are thinking. Okay, if you have that in mind and if you can spot at that on the chart, then you will have an edge in the market. So looking at this chart, we can see the price was falling, right? It was going short, it was going deep, and it got to a point. And while this movement was ongoing, what I told my VIP members in my community, I told them to just look out for price to hit this support level right here. And if we want to spot out that psychological level, what I'm going to do is just bring out a horizontal line and I place it right there at the commencement of that new week. Right now, I was expecting price to get to this point and a reversal, and that is exactly what happened. So what you want to do at first, at the commencement of your trading, if you want to behave like me, right, you just go into the charts and then you spot out zones of potential reversal. You can see on the charts right here, we have the resistance here, price got here, and on this same zone, on this same line, you can see that price got to this point and was rejected downwards. And if you study that closely, you're going to see support here and you're going to see some reaction around that zone. The same thing happened right here. So the first thing you want to do on the larger time frame, you want to spot out every of the zones. So I just looked at price on the weekly time frame. The next thing I want to do is to look at it on the daily time frame and also see the candlesticks. Right, study the candlesticks and see the opening of the previous day and the close of the previous day, and just try to map out every of those zones for myself. Okay, so I want to do that. The opening of the previous day candlestick. Look at this, guys. I'm just going to show you how I do every of this. So the opening of the previous day candlestick and also the close of the previous day candlestick. You can also see that price is around the close of yesterday's candlestick. Right here, that is what I'm taking a look at. Okay, after doing this, the next thing I want to do is to get into the charts and study the structure of the market. Now, when you understand the structure of the market, it will give you an edge to know what to expect and also to know the direction of the market, even without introducing any indicators. So I'm going to do that on the 1 hour time frame. So looking at price on the 1 hour time frame, I can see that there is a downtrend. So I'm going to bring in my arrow tool and I'm going to merge the highs in the market, right? I'm going to merge the highs of every swing and the lows also. I'm going to do that of every deep movement. I'm going to bring it down. You can see the price is reacting accordingly. And with this, I can really see that this market is a trending market. So whenever I get into the market, I'm literally looking out to see if price is in a consolidation or about to experience a breakout or in an uptrend or a downtrend or at a point where there will be a reversal. So when I spot out this channel, you can see I have my my support and resistance lines and I have the trend lines. The next thing I want to do is to look at time frame on the 15 minutes, right? Look at price on the 15-minute time frame and also look at the current market price. It is very important, as well as you study the past. It is important that you study the present too, so that you will know what you're going to get in the future. So the current market price, I can see that price is moving around the zone, and with what I can see here right now, I can see levels of higher lows. I'm going to put that again. That is higher lows. I can see some higher lows in the market, right? So what I want to do is just to spot out this trend within the big trend. You can call it a trend within the trend, right? We have the big trend, that's the primary trend being a downtrend, but inside that primary trend, I can still spot out a smaller trend, right? That's a secondary trend, which is an uptrend right there. So you want to spot out this zone and just try to get something for yourself. And one of the things that we do as professional traders is whenever price gets close to every of the zones, we expect a reaction. Now, for you to determine whether price is going to go short or go long at these zones of psychology, right, you need to take note of the kind of candlestick formations that you have. Just like the one we have right here, right now, you can see that at this point, price was doing what? Consolidating, and you have the rejection here. If you don't study the kind of candlesticks that you have there, you are not going to know if price is going up or is going to come down. Okay, so you need to pay a very close attention to that. And with that, after doing that, the next thing that I want to do is to introduce my indicators, because the indicators, I've been able to create a strategy making use of that indicator. And if I apply my price action techniques to it too, it's definitely going to give me what I want. But before I introduce those indicators to you, it is very important that you understand risk management. So I'm going to show you quickly my risk management plan, the lot size, and also the number of pips that I'm looking out for to risk or to gain per trade setup. So stay with me and I'm going to show you that quickly. Risk management is all about risk to reward ratio. As a professional trader, before you get into any trade, you need to determine how much you're willing to risk and how much your potential win is going to be. So to achieve that, it is important that you know how to calculate pip on the particular asset that you trade, right? And also what lot size you're going to use to take that trade with respect to your equity, that is the account balance that you have and that you're trading with. Now, I'm going to show you how to calculate pips on volatility 75 index. And after that, we're going to look at the basic lot size that we have on volatility 75 index. And I'm just going to give you a little recommendation on how much you should risk and what lot size you should use, with a potential profit and what you're looking at in the market. And after that, we'll continue with the indicator settings that I use for trading this strategy. Now, to calculate pips on volatility 75 index, you need to take a look at the quotes. The volatility 75 index quote has 6 figures. The price quote has 6 figures before the decimal point. Now, the digits that gives you the peak position is the second digit before the decimal point when you're counting from left to right. If you're counting from left to right, you could call it the 5th digit, right? Just before the decimal point. So you want to count that and you want to spot out any point, and let's just do a quick example and see how to calculate pips right here. I'm making use of an Android phone, so I'm using the MetaTrader 5 for Android. Now let's use the crossbar tool to pick out any zone and calculate the pips that it gives us. Now I'm just going to tap up at the top here. You can see that from 534407.57 to 546891.11, what we have on the crossbar calculation is 12483.54. Now, if you want to interpret this, this means it is 1,248 pips. That is 1,248.3 pips, or 12,483 pipettes. The number or the digits right before the decimal point is what gives you the pipette position, which is 1/10 of the pip. So if you want to interpret this, this would be 1,248 pips. And if you have price around here, it will be 599 pips. And if you have price all the way up here, it will be 2,547 pips. And that is how to calculate pips. Now let's look at the basic lot size for trading VIX 75 index. Now, the minimum lot size that you use in trading this is the 0.001 lot size, which is the nano lot size. Okay, this is the basic one, and this is one of the reasons why a lot of people trade this asset, because you can use this lot size to open a position with a $10 account or an $8 account, and you start making some profit. So what does this indicate? It means that the 0.001 indicates that if you take up a position, you are going to be making 1 cent per pip. So if we have price at 0.001, right, that is 1 cent per pip. But if we have price at 0.01, it means 10 cents per pip. And if you have price at 0.1, that means $1 per pip. Then the standard lot size, which is 1.0, means $10 per pip. Okay, that is $10 per pip. So if you want to do an arithmetic on how to calculate pips and how to go about that, I'm just going to try to put that quickly. If you want to calculate pips, all you need to do is this. Put in a 10 times the lot size you use times the number of pips that's accumulated. That's going to give you the amount of money that you're going to be staking. Now let's see the risk to reward ratio that I look at for. If you're trading this asset, be patient to take trades that are going to give you a risk reward of 1:3 or 1:2 minimum. Okay, 1:2 or 1:3 minimum. So the rule I give to my students is whenever you're trading this asset, do not risk more than 200 pips. So whatever lot size you're using and whatever your account is, do not risk more than 200 pips. And also, do not risk more than 10% of your equity or 10% of your account balance per trade on volatility 75 index. If it hits your stop loss, be fine. Learn the lesson. You will always have opportunity to trade it again. If you keep to this rule, guys, you're really going to stay longer in the market and you're going to make a lot of profit. Now, with that said, let's go over to see the indicator settings that I make use of for trading this asset on my mobile phone. On the video that I shared, you can see that these are the same indicators that I had on the chart, and I'm just going to show you the indicator settings on this video, and next to it I'm going to show you the conditions for using the strategy that I used to to get as little as 200 pips to over 1,000 pips within 15 minutes. Now let's get into my indicators. Now the chart is going to contain 3 indicator windows. And what I want you to do is just take note of every parameter that you're going to see on your screen. So if you want to learn more about this strategy, you can go and watch my 1-minute strategy for trading volatility 75 index. Now, indicator window 1 contains the relative strength index, and the settings is 14 period, and we have apply to close 3 pixel, and we'll have 90 and 10 on the levels. Indicator window 2 has relative strength index as the frame, and the settings for that is period 1, apply to close, style 3 pixel black, and the levels is 90 and 10. Now the first moving average that we're going to be adding there is moving average with period 50, and we have the method simple. Then the color we're going to be making use of is 3 pixel red. The next moving average is moving average 2, and everything like the moving average 50, but the color here is going to be green. And the next one is moving average 3, and the color is going to be brown. Then finally we're going to have moving average 5, and the color is going to be black. And finally we have the indicator window 3, and the settings for the commodity channel index right there is period 14, applied to typical price HLC/3, and the style is 3 pixel. Now I want you to take a very close look at what we have on the levels. So just look at everything we have on the settings here and put them on your indicator. Now let's go over to the chart and I'm going to show you how to use the strategy. What I literally did in the video was to pick out sniper entry, an entry at a point where there was going to be a price reversal. So if you take a look at the charts, even without any indicators, you're going to see that in that video I was looking at for a setup like this. Right, I was looking at for a setup like this and I got into the trade and I banked some profits for myself. One of the things that you want to take note of is the structure of the market. Anytime you see price going up and start forming something like an arc, when you see this arc formation, that is one of the conditions. It's a confirmation that, all right, there's about to be a reversal. Another thing you want to take note of is to look at price in the 1 minute time frame and observe these indicators, observe the indicators. Then I'm going to show you what I can see on indicators right now. The first indicator is the relative strength index, and literally what I use it for is to spot out convergence or divergence in the market. As you can see on the main chart, price is creating higher highs right here. Right, price was creating higher highs, but on the RSI I was seeing lower highs. Can you see there was lower highs there? So that shows divergence in the market, and that was an indication that price is going to do what? Drop. But if you look at the charts just like that, you're not going to know when price is going to drop, when that reversal is going to take place. So to get that reversal point, what I do is I look at the moving averages, the set of moving averages that we have on the indicator window 2. And I wait for price to get to the 90 level of the RSI, right? And we have the convergence of all of them, every of them. Can you see that we have convergence of all moving averages? The zoom level for this is zoom level 1. I repeat, the zoom level is zoom level 1. So we have the convergence right there. And when I see that and I see the cross, you can see that the smaller moving averages are above here, but at this point they crossed the moving average 50 and it went down. Right, so when I see that cross, I know it's an indication to do what? Sell. And finally, the next thing you want to take a look at is the CCI. Price has to be on the strong sell or the sell level for you to do what? To apply for a sell. So if you have every of these conditions met in the 5 minutes and also in the 1 minute time frame, then definitely you are looking at to bank a lot of pips for yourself. So if you're using this strategy on the 5 minutes, you're going to be looking at price on zoom level 2. But if you're using it on the 1 minute time frame, you're going to be looking at price on the zoom level 1. Okay, that is how I make use of this strategy, and that's how I got a lot of pips and I banked the profits on that video. Note that before you use this, you need to identify the trend of the market. That is very crucial. Okay, and if you stay with me to the end of this video, I'm going to show you very important information, something you're going to look out for when every of these conditions are not met and you still want to take a trade. I'm going to show you something that I do to get some entries. Now, if you have watched this video to this point, then I really want to congratulate you and I want to give you a free gift. Now, you can check the description of this video to have link to join my Telegram platform, and on that platform you're going to connect with my Telegram community, and you're going to get to share the resources that I post on the platform every single day. All right, let's look at this. Imagine you don't have any indicator on the chart and you still want to trade this asset. Let's apply the price action that I talked about before. Now we're looking at this. You can see that we have this on the market. We have this trend. If you don't have any indicators, you can as well get into this trade like this. Then another thing I want you to show you is that if you look at price on the 1 minute time frame, this is the very thing that you are going to be getting from this tutorial. If you look at price on this time frame, you're going to see a structure in the market, right? What you're looking out to pick from this trade is not the short term here, which is going to give you about, let's see how many pips you're going to get within that range. If you look to price, if you look to take price around here, you'll be getting 100 to 200 pips around here. Now, what you're looking out to take from this trade is something huge. close to 1,000 pips. That is what this trade was going to give. Now, I recommend that you watch my video on when to scalp and when not to scalp the market. It's going to help you to know how to identify the chart patterns, to know when to just take your positions for a short term or to take your positions for a longer term. Now, this trade is not just a short term. You can take short term and also look out to take the long term, which is going to give you thousands of pips. Like you can see now on the market, you have this movement from the top here to this bottom is about 1,270 pips. Okay, so how do you spot it? You're going to look at the market, and once you start seeing an arc formation, can you see this, or an inverted teacup, right? An inverted teacup, right? That bottom there, it gives you a very strong indication. And this is the huge takeaway from this video, guys. On the market, volatility 75 index on the 1 minute time frame and on the 5 minute time frame, it has a way of creating these arcs. I call them arcs. Whenever you see them, you're going to be leveraging on those arcs to make a lot of profits. Okay, and another thing that you're going to be looking out for is order blocks. I'm not going to talk about order blocks in this video. I recommend that you subscribe to this channel and turn on your notifications so that when I post the video on order blocks, you're going to be notified. And also drop in the comments your questions. If you have any questions, feel free to drop that on the chat right now. I hope you got huge value from this video. Please try out this strategy on your demo account at first, then comment below how the strategy works for you. Check out this video right here to learn about my scalping habits, and also this other video right here. Thank you for watching. My name is 𝗵𝗵𝗆𝗏 and I'm always here to help.
Nothing can stop me, I'm all the way up.